Good afternoon, everybody. Welcome to your Tuesday edition of the Trader Merlin Show. I'm going to get my pen here ready, something to click on and have some fun and take some notes. Hope you all had a good trading session out there. We'll talk about, I guess, the depth of these markets. We went about face to what I thought was going to happen. I thought we'd have Monday, Tuesday, Wednesday sell-off, and here we are with a nice little rally today. We'll talk about that in Russell's great 2% gain and overall summarize what happened for the month of January because a lot of people are keying into what happened for January. So I thought I would go through a viewer question that came through, and oh boy, I think I may have not have even put that one in here yet. Dab nabbit. I was all prepared, thought it had it all really good, and then I forgot to put the gentleman's question in here. So I guess I'll scroll all the way back to the top, and we'll just bounce right past the question. Here it is. I know I've had it in here. This is the question came in. And yes, that is a graphic of me. I'll show you in a second. But Ivan, one of the regulars out there, says, you being a trader for many years, if you were to talk to your old self at the beginning of your trading career, what tips and pointers would you give yourself to become a successful trader? That's a great question. I don't think I've actually done that in its entirety here, so I think I will do that on today's show. But here's the graphic I did. And yes, I took actually a picture of me today wearing, funny, AI does some pretty cool stuff. I'll put the hat on that I was actually wearing. So this is the hat that I wore. I took this picture like an hour ago, and this is the hat that I was wearing. I have my little Coppola hat on. And for some reason, AI decided to take that picture and turn it into this. And basically I said, I took the image and I said, take this picture, make it 20 years younger, put some, stock market in the background, and that's the picture I got. So there you go. AI, gotta love it. I'm gonna try to do as much AI stuff on here as possible. So let's talk about at least my background. For most of you know, I'm a real, I say, super active trading career started in 1998 when I took an online trading academy class back in Southern California on June 1st. That was my first official class day with OTA, and that class lasted a month. And you're like, well, wait a minute, that's only 25 years. Where do you get the other two? Because in college, I actually started up a day tech trading account and was actively, well, let me take that back, not actively. To me, active is trading every single day. Now, I was watching it every single day. However, I was making more swing or position trades because that's what my university was teaching me. I had a brain dead idiot for a professor at that college, and I could not believe in hindsight what he was teaching. Absolute garbage content, mind-boggling the stupidity of what I was taught about long-term investing. He basically says, your last name starts with an R. Okay, you can only buy stocks that start with the letter R. It's like, well, what am I supposed to be looking for? Well, just look for things with good fundamentals. And that was like the whole class for one semester. Anyway, so I thought there was a better way. I took a class with OTA, and like many of you, you learn from UHK, the University of Hard Knocks, which is a very expensive, brutal university. If anybody's ever gone to that one, it's the most expensive university you can go to, and that's usually done by doing this all on your own. So from there, I traded on one of the largest retail trading floors on the West Coast. I was headhunted by an Italian bank and was brought over there to teach for banks and brokerages. I taught how the trading system works. I was on the floors of some of the exchanges over in Europe, teaching these floor traders new technology like direct access. I ended up teaching for a university in Italy. I came back to OTA in 2005 and been building content for them ever since, and traded just about everything, right? Stocks, options, futures, Forex, cryptocurrencies, real estate, you name it. I have an attitude that if there's a way to take something and modify and make money off of it, then I'd like to learn how to do that, right? If my investment can continue to grow, then there makes sense for me to learn that thing. So that's the gist of today's topic. So here is the start. And it took me a while. I actually really thought about it. So thank you, Ivan, for the question. But here's what I would tell my younger self. And probably in this order. Number one is the market is always right. One of the chapters that I wrote in my book, which I will not divulge the full details of it, but it deals with my first live day of trading. And my first live day of trading, and I mean, when I say live trading, it's after I took my 1-month class with Online Trading Academy. I now went on that trading floor with 180 other people, and it was absolute chaos. And I was supposed to follow all these rules. I thought I was smarter than everybody, and I ended up just doing really stupid things because I thought I was right, yet ultimately the market was right. And this is a tough one because we look and we formulate our opinions, we take in all the news, we watch Jim Cramer, we're glued to Maria Bartiromo or Joe Kernan, whoever it is, and they persuade us or give us their impression of the markets. And their impressions don't matter either. Bottom line is the market is going to do whatever the hell it wants to do. And anytime you lose, it's your fault. It's all my fault. When I lose money, it's my fault. I either misread the market, I didn't apply my rules, something was wrong. Fine, I had to admit that. It took me about 2.5 years to finally pull my head out of my backside and say, you know what? Stop being so arrogant. The market is right. Just sit there and do whatever it does. And it actually has to do with part of where I live. So I live in Southern California, and I had some friends that were real good surfers, and they would always tell me that part of their day, like they could go out there and go surf on any day, right? You could just walk into the ocean and hope there's waves. But why would you do that? Because it's just a waste of time for you to walk into the ocean if there's no waves. So a lot of these surfers had webcams set up or would drive the coast knowing certain high tide, low tide conditions might impact different areas. So they already knew the terrain. They knew the market, if you will, for beaches. And then they would share that information. They had little user groups. They would chat and say, hey, the waves are great here, the waves are great there, or bad here or bad there. And they would avoid those market situations. And to me, that's kind of similar to what we talk about, which is the market's always right, but we have to let it tell us what to do. If the ocean is totally flat, it's stupid for anybody to grab a surfboard and try to go out and go surfing. It's an absolute waste of your time. It'll just be, you'll come back frustrated. So I look at number one is the market is always right. And I struggled with the order of these, I'll be honest. But this one was probably the toughest one for me to get over was put your arrogance aside, quit being so cocky, and just say the market's going to do what it's going to do. I just have to listen to what it says. And that's why I love technical analysis, because that allows me to look at that market objectively and let it tell me exactly what to do through the charts. Now, Tom says, most servers just sit out there and talk about the awesome waves the other day, bro. They do. They're sitting, but they're not going to go out there if they know there's no sets coming in, right? A surfer knows, yes, there's be times a lull, right, where you're just sitting there waiting for the next wave or next set to come in. But there's no way an experienced surfer is ever going to go out in that water when they know there's no waves today. You know when they're coming. All right. Hey, good to see you, Kev. Take a paddle. You're right. And maybe that's what happens to a lot of SoCal people to become paddleboarders. So number one is market's always right. If you want to point the finger at JP Morgan or Goldman Sachs or Jim Cramer or hell, I want to say the horrible man's name, then, that's on you. It's really the market is the one that's always right. So let's go number two. I don't want to spend a whole hour doing this one. Number two was, I would say this probably took me the longest because, and I would argue that it's actually a work in progress. Number two on this list is have a plan for everything that you do. Now, I've mentioned to you many times before that I have a lot of different accounts. I've got some multiple options accounts. I have multiple equity accounts. I have futures accounts. I have dozens of cryptocurrency accounts. And the cryptocurrency ones, I will give an exemption to this part right here, and probably because I've opened those up after trading for 20 years with experience. So I would say with every one of the accounts that I open up, I have very specific rules for what I can and cannot do in that account. When I say I have a plan for everything I do, this goes back to the show we did with Ryan Watkins. Your plan should be broken into two separate parts. Number one is your plan as a business. How am I going to approach trading? What are the rules that I have to follow? What are my personal circuit breakers? Meaning, if I lose this much, I'm done. Wipe your hands, move on, close the trade out, and be done with it, move to the next day. Those things all need to be defined, and I can tell you through personal experience that when I violate those rules, it ends up costing me dearly. I mean, a lot of money. So I really think it's important to have a plan for every account that you have. And I know some of you are like, well, I've got 4 different accounts. Okay. Well, what can you do in those accounts? So for example, I have at E-Trade, I have 3 separate accounts at E-Trade. One of those accounts is a much more aggressive account where I'm allowed to go long, I'm allowed to go short, I'm allowed to trade just about everything except Cisco and Apple. I also have in that account specific stop loss parameters where I'm not allowed to lose more than a certain amount per trade. Also at E-Trade, I have another account there, which is my 1% account. And in that account, I can only sell options. I can only sell puts. And if I get exercise, I can only sell calls against that or close that position. Very specific rules on how I pick my strike prices, what the targets are. So I have a game plan for this arena. I have a game plan for that arena or that account and that account. It sounds tedious, but it's really not. Once you get your rules set, it's easy to point at one account and say, this is what I should be doing here. One of the things that kicked my ass in the early days was I had one account and I'd be, let's say, if you go back to the late 90s, I was really a day trader. So I'd have a day trading account and I'd buy something. I'd be in 5,000 shares of Intel, and it's ripping and going right in the close. And I had a nice profit, and all of a sudden it starts to tank near the end. And the last hour of the market, it puts me into a little bit of a negative position. Well, my mental rule for that account in the day trading days was no overnight positions. It's a day trading account. What the hell are you taking anything overnight? But your brain convinces you that, man, Intel was running, had a little bit of a sell-off. We'll take that overnight because it's going to gap up tomorrow. And next thing you know, Intel gaps down, sells off all day the next day, and then until you finally throw in the towel and get out, and then it actually rallies. I made the problem of mixing objectives and styles in one account. If you want to be a day trader, do that specifically with day trading account. If you want to be a long-term investor, do that in a long-term investment account. But do not allow yourself to merge those two styles, because you will make an excuse for a bad trade and turn a small little loss into a big one because you're like, oh, I was going to keep that for the day. Now I'll keep it for months. Huge problem for me early on. So have a plan for everything you do. Now, with that, you've got the business plan side of things, which is how you're going to approach trading as a business. Number two, you have each individual trade setup, which again, that's how I'm defining each of those accounts. The third part should tie into your overall business plan, which is what's your risk management approach, right? And that ties into, I think, it was what I put my bullet point number 3. And if you guys want to discuss, type it in the chat. I'm watching for the question marks like Tom did on his question. Just put a few question marks in there and I will bring it into the discussion here today. So the third piece is forget about making money. This one, I have to say, I'm probably the only person that says this. I've been in this industry for 27 years, and I've never heard anybody says, forget about making money. To me, that is one of the most important rules that has helped me in my success as a trader is forget about making money. It doesn't matter. Making money is a byproduct of not losing it. So I've mentioned this many times in the program. I'm sure some of you are probably sick of hearing it, but these types of things deserve to be reiterated over and over and over again because they are the cornerstones to success. Be honest, how many of you, when you first started trading, you were just wide-eyed thinking how much money that you could make, right? Oh man, I'm gonna make so much money. I'm gonna open up a $10,000 account, and next thing you know, I'm gonna have it at $100,000 by the end of the year, right? This is what people go through in their heads, and the vast majority of you are going to say, yes, I was thinking how much money I'm gonna make. However, what you didn't think about was how much money you could lose, right? As Big Eb says here, I think about not losing money. And to me, that's fundamentally what changed everything for me because I was only focused on making money when I started. Hell, when I drove down to Southern California to take my first class, I was singing up. I love kind of rapping. I'm actually a pretty good rapper in my own mind because I can flow with lyrics and I can always find the right words. I had all these lyrics for success and making tons of money. I had pictures of yachts I was going to buy. The picture of the yacht is actually in my book. I actually have the ad of the yacht that I was going to buy. But I didn't think about losing money. It was inconceivable that somebody with my level of intelligence back then would possibly lose. And then you find that you get your butt handed to you on a regular basis. So losing is the only thing that matters to me. Now, I'll have successes. I'm hoping this week that the some of the options trades that I've been in it or that I am in right now, some of you thought I was crazy yesterday. Like, what? Are you nuts? That's way too aggressive. It's okay for me. I have a plan laid out for that trade should it not go the way that I want. However, it ultimately comes down to what's the loss on that trade, right? What's the maximum going to be there for that trade? And everything that you do, you should think about how much am I going to risk on this one or lose on this trade. The truth of the matter is everybody will lose. You're all going to lose money at some point. Most of you already have lost money, so that's fine. Yeah, and I would say, Tom, that mine's a variation. Right? I think that Warren Buffett, rule number 1 is never lose money. Rule number 2 is see rule number 1, right? So, yeah, I would agree that Warren Buffett has the right approach, but we're very different types of people out there. Once I actually learned that Warren Buffett, this is, 6-7 years ago, when I learned that a vast majority of his money that he was making wasn't necessarily from the business investments that he was making, but rather from the options that he was selling. There was one year we collected $6 billion worth of premium on his options for companies he was going to own anyway. And I was like, let me look deeper into that one. So anyway, go to that one. Let's see, what else do I got? Do you buy puts or calls? So Alpha, good question. It depends on the account, right? So when I go back to the E-Trade or my Ameritrade accounts I was talking about, I have 3 of them there. And one of them is I can buy, sell, do whatever I want. In the other account, I can only sell puts. I can't buy puts. I can't buy calls. I can only sell puts or sell calls against the position I've been exercised on. And again, that's specific to that account. So I guess really the answer to your question is it depends on which account I'm looking at, because there's some accounts I can do whatever I want. That I buy puts or calls. So I sold puts on Boyle. I sold $107 puts and collected 40 cents worth of interest, which ended up being 5.7% rate of return for this week. Expires on Friday. Pretty good rate of return. Very high risk. I could easily get slaughtered on that one, but I do think over time I'll be selling. If I get exercise, I'll sell calls against it, and we'll be fine. So anyway, there you go. Let's see, what else do I have here? With the losing money rule, does that apply to Bitcoin or Ethereum, seeing as how they are so young? No. So Blue Diesel, great question. So when you look here, and I can make exceptions for different things. For example, notice on number 2, it says, have a plan for everything you do. Number 3 is forget about making money. Well, obviously I'm in every investment that I'm in because I want to make money, but I can't be really wrong and lose a lot. With crypto, all the money that I've funded my crypto accounts with over since 2017, so last going on 6 years, all of that has been risk capital. Every penny of that I've looked at and said, if I lose every cent of that, it's okay. Now, I know you don't want to hear that, but that is because it's such a young industry. I feel that we haven't even scratched the surface of what can happen. I feel once adoption comes in, then 5 to 10 years down the road, these will be massive winners. And for that's my number 2. My plan for everything I do with crypto in that example is I am holding that for a long time. And I'm going to be at least 5 years. Actually, I told you that in 2025, in November or December, is when that thing should peak again. I'll probably unload everything in my crypto portfolio in November or December of 2025, and I will buy it all back in 2026 after 1 year based off the cycle. Do I have a long-term account? Not really. So other than the 401k accounts, I don't really do much long-term. I feel that I'm much more successful as an active person. So yeah, I'd rather be actively generating income on my positions and trading it. So no, don't really look at the long-term stuff other than what I'm stuck with in 401ks. Even when I go self-directed IRAs, I'm going to be more active in those accounts. So, number 4, hold Bitcoin and Ethereum with that one. Yeah, so far Boyle has worked, but there's no reason to gloat or get excited about it because it doesn't really matter until Friday when we do Friday's show. I'm hoping I'll have a nice glass of whiskey based off what happened with Boyle. If not, I'll have a nice glass of whiskey and know I'll be exercised on Monday and own some Boyle shares. So I'm not freaking out about it. It is what it is, but the rates of return were so good. I think you'd all agree that 5.7% rate of return for a week, not too bad. Actually, less than a week. It's for like 4.5 days worth of trading. If the price of Bitcoin gets to what I think it's going to get to, there won't be a party at my house, but there might be a big party somewhere else. Because if Bitcoin gets the price target that I have on it, that would put you in the eight figure, possibly. Actually, it put me in the 9-figure account position. It'd be actually not 9-figure, it'd be 8-figure, big 8 figures. So it'll be good. All right, let me go back to this list before we get too sidetracked. So I got market is always right. Y'all know that one. Have a plan for everything you do. Number 3, forget about making money, which is a tough one for you to swallow. But for those who are new, understand that trading is not about making money. It's about keeping what you have and making sure that you find a way that you can consistently grow your accounts, not have grand slam one-hit wonders or paper trade the rest of your life. Number 4, constantly be learning. Technology changes, exchanges change, the rules to the marketplace change. SEC changes rules all the time. You have to be aware not only of the markets that you trade, but there might be new technologies to help make your trades better. There might be different trading strategies which you could experiment. I'll get to that in just a second. But always be learning. I should put an asterisk there, and the challenge with learning is finding people that you trust to learn from. As you guys know, there's an individual who I don't like to mention his name, but he's the absolute scum of the earth, and he claims that he's such a great trader, but regulators have actually shown by subpoena his trading records that he's losing money. So to me, that's in scumbag educator category. However, there's a lot of really good people out there. I look at someone like a Larry Jacobson or Todd Davis or Corey Lane. These are people who are sincerely out there trying to help someone learn the markets that they trade. And they're going to show you all the ins, they'll show you all the outs, they'll show you all their mistakes. It's about being humble and saying, here's the mistakes I made, learn from them, because you can learn them. You can learn them on your own, but you're going to pay a lot more money than education by learning on your own. So constantly be learning. There's a lot of misinformation. I would say there's a lot of bad stuff out there, but the more you do this, the more you'll be able to filter through it and go, that's crap. That stuff doesn't work. Number five on this list. I think I had 7, so we're almost through it. I don't know if I'm torturing anybody. What I would tell my younger self. Number 5, constantly be reviewing. I personally don't think I would be where I am today if I didn't stop back in 99, 2000. Hey, Ivan, this question is because of you, Ivan, so thank you very much. I don't think that I would be here today if one of my friends on the trading floor said, review your trades, man. You're not looking at what you did. How do you expect to get better if you don't learn? I was like, well, in my mind, I'm thinking, well, I don't need to because I'm super smart and got a degree and I'm a quick thinker. Well, I was making mistakes left and right. So if you review, and I've said this too many times in this program, you have to be reviewing your trades, whether it's a winner or a loser. And I personally think you learn a lot more from the losses. The winners, you did what you were supposed to do, fine. It is what it is. Great. Maybe you could have rode it a bit longer and had your trail stops a little bit better, but either way, you made money on it. End result is you made money. That's what your goal was initially. Reviewing for me helped me identify the nuances of my behavioral deficiencies, I will say. What I mean by that is there's certain things that I would do or actions that I would perform or my psychology would change the way that I acted based off of positions that I would be in. Some of the quick things I learned about my trading. I learned that I made most of my money as a day trader in the opening hour and a half of the market and the closing hour and a half of the market. That's 3 hours. Well, what happened the other 3.5 hours of the day? I would spend that time giving the money back because the markets are flat and didn't fit my style, right? It's just a curve that I drew out and said, wow, I'm making most of my money in the morning. From 6:30 to 8 is when I breadbasket as a day trader. And then I would spend the rest of the day giving it back. So why don't you just leave? And so that's when I started my 90-minute trader mentality because I observed my trades. I also learned that there's certain share thresholds that once I got past, psychologically, I wouldn't trade the same. So some of you might be trading 100 shares or 500 shares or maybe 1,000 shares at a time. Doesn't really make your heart palpitate. Doesn't make your sweaty palms or get nervous or fidgety. But when you get to 10,000 shares of something that's fast moving, now all of a sudden it's a different story. You're really nervous. You're like, man, you're jittery. Your teeth are clattering. You're impatient. You're biting your fingernails. You're yelling at the dog. Your psychology changes. So I didn't really notice that until I was reviewing my trades. And I found that when I get over 10,000 shares as a short-term day trader, I'd lose money. So rule was stay under 5,000. I can do plenty of damage with 5,000 shares in the equity markets. Now, use leverage instruments like options or futures and Forex. You don't need to have that big of an account. But back then, you kind of had to have a big account. So constantly be reviewing. I mentioned this story. I can't remember the gentleman's name, but he was a student of mine back from like 2002, 2003, somewhere in there. And he had said, I saw him at a trade show and he came up to me and says, hey, can I, take you out to lunch or something? I was like, I got a bunch of stuff to do. He's like, come on, I want to show you something. Okay, fine. So I went to lunch and he pulled out a couple of spiral notebooks, just a couple, these types of things. Hold on, let me bring one up here. This type of notebook, a spiral notebook, but he had the 8.5 by 11 ones. And he goes, look, you were so adamant about me journaling, and I did. And he started showing me his trade journals from early on. And then he says he started pulling out more books, and he goes, look at the evolution from when I started to where I am today. And he goes, it's this process that's made me successful. He goes, I can go back through and look at every single trade, and I know what I did right, I know what I did wrong, and now I'm building on all that. And he goes, I'm a successful trader thanks to you. And of course, it's not all me. I'm sure there's a ton of work that he put into, and he had some other educators help him. But that type of stuff makes you feel really good. And it really was all about reviewing his trade. So go get a cheap 99-cent notebook from Target or Walmart and start mapping out your trades and journaling. As Dr. Woody Johnson would say, from a psychological perspective, you got to be journaling as well. Take us on a cruise. Let's see. What was the number? Well, wait, you promised a big cruise for all of... No, I don't believe I... Did I? I'm going to have to go find that show, Tom. Bitcoin gets to 250,000. I could definitely... That was the number I think I targeted. Actually, it's weird because I have two different numbers. I have 250 and I have 290. I need to redo my numbers to get on the same page because they're slightly off. But I could see taking us on a cruise. I could see a few of you. I can't take... I mean, it's the regulars, not the ones who dropped in on once in a while, but the regulars, the ones who are here all the time. Sure, I'll take you on a cruise. I got to figure out what the number is. If we get to 200,000 on Bitcoin, I'll take you all on a nice cruise. How about that? Let's see. Let's go back to my list. So I've got number 1, always market is always right. 2, have a plan for everything that you do in each account, by the way. 3, forget about making money. My philosophy is that making money is a byproduct of not losing it. Number 4, constantly be learning. Number 5, constantly be reviewing. Number 6, try different things. I know this one sounds a bit strange, but I'm not saying with your main account, go and try this strategy, right? But if you hear about someone's new strategy or some technique that you go, ooh, you know what, this sounds really interesting, let me try that. Then maybe what you do is you take a couple $1,000s, you put it into an account, and you try with that strategy. You see if it works, but start small. You'll never know if a strategy works or not unless you try it. And don't take someone's word for it. These guys that say, oh, I don't lose trades, or I got a 99% win rate. And I almost felt bad saying my win rate in December. Having a 94% is amazing in my book. And it wasn't a gloating thing. It was just saying that in that specific strategy, which was predominantly selling options, I had a very high win rate. And you may not achieve those same rates of return, right? You would have to try it for yourself and always experiment with new strategies, because it may be something that can augment the strategy that you're currently doing and take it to the next level. I'm not, as you guys know, I'm not a big options trader. However, I've noticed that a majority of my trades now are shifting over to the options side of things. Why? Because for whatever reason, my consistency has significantly started to go up. And for me, that's what's most important. It's not about having the higher rate of return. It's the consistency, and consistency compounding will lead me to a much higher rate of return as the end goal. Oh, what do you want? Now you can't have a 3-day cruise from Mexico. It's got to be something big like Mediterranean. Well, you guys are really taking that ball and running with it, Tom. Let me see. Last one on here. I said, so 6 was try different things. And number 7 is gamble only with gamble money. So there's been a couple times where I've mentioned trades that I'm in which were gamble trades. And never do that in your main account. Never take gamble trades in your main account. Always do it in an account that you know that money is as good as gone. So if it's a $2,000, or let's say $1,000 investment, you go, okay, this money is as good as gone. This is a high flyer. Go into that trade knowing that money is going to disappear. That's generally how I do my gambles. Of course, when I do a gamble trade, I'm not looking for something that's going to give me a 2 or 3 to 1, reward. I need like 50, 100 to 1 risk to reward ratio, or reward to risk ratio, to make those ones work. So I'm able to take those who hit the like button. Lisa, you're on the boat. You get the stateroom. You hit that like button every single day. I appreciate that. So feel free to ask me questions that I might be able to elaborate on, but I would say that this is kind of my quick and dirty list of just 7 things. It's not about trading a specific market or asset class. That's, to me, part of the try different things. Some of you might just be trading stocks. Great. I would say if you're trading stocks now, learn to trade options. If you are in the options market, maybe learn about futures, right? Learn about the different asset classes and see kind of how they tie together and the symbiotic relationship of asset classes to each other, and understanding the impacts of bonds and Forex on the equity markets and how options lay into that. So to me, that's my top 7, which I think if I look back 20 years would have put me in a totally different place. Unfortunately, in everything in our lives, in all of your professions and careers, I'm sure you have things that you would love to go back and tell yourself when you were younger. And I got to be honest, if I went back through and I told myself all of these things So when I got started, let's see, I was 25 when I really got started very actively with trading, period. If I went back and I had somebody who I looked up to and said, man, this guy he's killing it, knows his stuff, successful, and they told me all these 7 things, I got to be honest, I don't know if I would have followed those rules. It's just because I think when you're younger, you have this invincibility about you. You have this stubbornness that says, I don't need that's an old person talking. I don't need that garbage. He's old hat. I'm new. I know the new technology. And I think that was my attitude back then. So even if someone gave me this list, which they actually probably did give me through education and just mentorships, I'm not sure if I would have followed it all. But I would encourage anybody here who's starting out and still learning, follow those rules, right? Always go back and always think the market's right. Have a plan for everything you do. Forget about making money. Constantly be learning. That's a big one. I should probably move that one up a little bit. Constantly be reviewing, try different things, and gamble only with gamble money. All right, Ganesh, what did you say here? Ganesh says, don't you think a particular trading strategy works for a particular time frame in the market and fails in others, like options selling? When do you switch, if so? If we start to go into a more pronounced bear market, then I won't necessarily stop selling options in that account, because the premium is going to be better, right? If the equity market starts to fall apart, I would be getting better premium as the markets tank because people are looking to buy puts. If it's a strong bullish trending market, right, and I felt very confident that this market was going to continue to rally to the upside, then I would probably, in my options account, I would actually buy the underlier and I would sell calls against it, but much higher. Because at that point, people are looking to buy calls. And if I can find levels that are high enough away where I'm probably not going to get rid of my shares, then that's when I would switch that strategy, right? But I don't think we're in a situation right now where I look and go, man, this is it. Bull market's back. We're ripping to all-time highs. We will have that at some point. Like I mentioned, I think this year is going to be very choppy. You're going to have your ups, you're going to have your downs. I think a lot of chop. Once we do finally bottom out, and I don't know if this was the bottom or it's coming in the next year or so, but at some point we will have a robust, resounding bull market where it seems like every day is nothing but up. My options selling of puts probably not going to do very well. So I'll buy the underlier at that point and then sell calls against it to not only capitalize on the move of the underlier up, but also to get extra premium because of the calls that I'm selling. So that's how I would adjust for that one. Ganesh, that's how I would do it. I know Lisa and Liz on the record every day. Cool. I really know. Nice. You ran 2 5Ks in January? I did not. So I am going to start now that I feel better, my back doesn't hurt as much, I'm going to do my 100 push-ups again. I can't do the 100 or 50 burpees. That was just too much, man. Just brutal. I have a wrist issue, so I can't, I'll do the push-ups. 100 push-ups plus writing my book for 30 minutes a day is my February challenge. All right. Do you utilize any option spreads maybe this year? I don't, not yet. I'm still on I'm actually been taking watching a bunch of Larry stuff. So I will probably start incorporating more of that in going forward. But right now, everything that I'm doing in my accounts is working very well. And at this point, I'm not going to implement anything else. I'm not going to implement anything else yet. I may actually, in another account with a small amount of capital, start and look at some of those strategies, but they're not incorporated in, Dave. But it's been something I've been wanting to do. I want to do more with spreads, and like Tom's doing with, butterflies and iron condors and all this different stuff. Did my push-ups. Nice. Good for you, Thomasina. Excellent. The first time, it always is harder, and then it gets a little bit easier for the month. So up that number the next month. I'll bring up the February one tomorrow. We'll do it near the end of the show tomorrow, or maybe we can just do it today. So let me see what I have here. Let's real quick look at the month of November just to see where we are with regards to market gains, and we'll look at what happened out there today. And again, if you have any comments and questions, throw them in there, and I will get to them. So let's look at month of November. See what happens when you're trying to move really fast and do a lot of different things. We'll just get rid of that one. How about January? There you go. These are your rates of return for the month of January. Let's start at the top. Bitcoin, 39.61%. So about time we had some joy in the cryptocurrency digital asset space. You can see that really has been just a great January. I'm not optimistic that this is the end of the downtrend. I still think we're going to chop back and forth on crypto until we get FTX and stuff out of the way. So that's a little bit, it's great to see the gains, but still I don't think we're quite there yet on the big picture. Now, moving on to your second best performer. I was going to go from the bottom to the top. Well, they came out together. Pretty much the same. NASDAQ 100 was up 9.93% for the month. Russell, 9.38%. I'll show you those charts here. Here is the NASDAQ working from our top to bottom. And there's your blue vertical line, really means that's the January 1st one. So, been great. And especially now you had that little extra bump of 1.54% today on the NASDAQ 100, putting it 12,152. Not a bad day. Russell 2000 was your real ripper today. It was up 9.38% for the month, and on the day, 2.42%. What's not the right word, what do we say? What's exciting about the Russell is we've broken above. I had this red line here at 1900, right? Because that's where there's a lot of points of contact. But if you look at all of the tails, we've ripped through the last of the tails, which means you're probably going to 1960 is your next stop, which is only 21 points away. And then you start to see this challenge back up here right around 2030. So Russell looking real good. Looks like it's built a base. It's making higher lows. Now you're seeing breakouts of an ascending triangle. So all in all, I think Russell looks really good right now. And for the month, 9.38% gains. Yabba dabba do. Ivan, thank you very much for the contribution, my friend. And thank you for the question. I hope that some of that helps. And you can always ask further elaboration. And I will be happy to do that as well. Next on the list, gold. 6.43% for old GC for the month. And this time I did futures just because I was in a rush to get this done. But it's been looking great. I can say the only negative part here with gold as we speak is you notice you got a lot of bottoming tails. For the past 2 weeks, you have a lot of chop and bottoming tails. That means that at some point during that trading day, this thing was selling off, but buyers pushed it back up. It is a sign of weakness because it tells you that the sellers were stepping into the equation. You look back here, going all the way back into, go to November, tail end of November last year. You don't really have bottoming tails. There's some really tiny ones, but this past 2 weeks has been a lot of bottoming tails. So it's still bullish because it hasn't closed lower, but those tails do make you a little bit nervous that a correction may be coming. And again, I think 1876 is a very logical price target for gold to come down to. Moving on our list, we've got the S&P 500, 5.77%. Even though it moved 1.43% today, it's been looking good. You do have a similar picture to what we had at the Russell, but the Russell's broken out of this range. The S&P has not. So it's not as powerful, but still looking pretty good from a bullish perspective. Again, I think you all understand that tomorrow is the day where anything can happen, right? It can be a big day tomorrow, and I'll explain why when we get to the end of the show here in just a second. I got two more things to talk about. Number one on the list is Dow Jones Industrial Average, putting in a measly 2.5%. Here is your Dow today, which is up 1.1. So half of its monthly gains came today. And let me go and show you the vertical line for January 1st, just so we can see where it started at. You know, it was looking great. Sold off a little bit, but now just kind of meh. Nothing overly exciting. It looks like I could pull the Tom Barr box on here and put that right around. And I'm going to cut out that tail. I know some of you are like, don't cut the tail. Well, I'm going by more points of contact, and that looks like the box that we should be looking at for the Dow. So really, range-bound markets, sell some options or spreads on those, or wait for the breakout. Dow is one of your weaker performers for the month of January. And lastly, bringing up the rear, oil. There you go. 0.21% for crude oil. Here is your chart. Even though it's up 1.52% on the day, been a rather choppy month for it. It started off the month real weak with some heavy down days for the first two. Spent the rest of the month trying to regain on those days and then sold off near the end over the past couple days. So all in all, it does look decent. It just smacked its head against that supply in the yellow box there and been selling off. So we will have to wait and see where this one goes from this point here. I'm seeing a lot of really bearish commentary from industry experts on crude oil. So we'll have to wait and see if this overhead supply level does in fact hold here and push things back to the south side. And that, my friends, is your overall month of January results. Now, we still have things to look at for today. When we look at some of the economic data, which we'll look at for tomorrow in just a second, there was some bad data out there, right? We saw some of the housing data not looking so great. So here you have the Case-Shiller Composite 20 Home Price Index and HPI data right there in the red box. You see a contraction on HPI, which means housing prices starting to drop. You also see the Case-Shiller Composite 20 Home Price Index. That decline was 8.6% Now we're at 6.8. Remember, that thing was over 20. I don't have it ready here right now. Let me real quickly see if I can bring up that chart for you so you can see it. But we were having 20% month-over-month gains in that bad boy. That was crazy. And now we don't really have it. Let me go to... I'm trying to bring up the... oh, there we go. Forex Factory. I got multiple things going on in my brain. There we go. So here is your Forex Factory. We can go and look at the Case-Shiller Composite 20 Home Price Index just so you can see the chart of this bad boy. I mean, that is not a really good sign. Not very good at all. We were over, let's see, at the peak we were up at about 21.2% month-over-month gains. Now we're at 6.8. And from my understanding, the year-over-year average gains for housing is between it's like 6 and 8% per year. So we're still in that range right now. But given the current trend, it looks like this could be dropping even lower in the next month. So that was interesting to see that number decline. But it was in line with expectations. You also had Chicago PMI numbers getting worse, which means Chicago area not looking so good. And that pretty much wraps up your economic calendar for today. Now, what about tomorrow, right? The earnings calendar for today, we did have some big names reporting earnings today, which may have been an impact to your report. You had AMD, here's the list. You had AMD beat earnings. Let me bring up the calendar for you. AMD beat earnings. You had ExxonMobil, you had Pfizer beat earnings. Caterpillar missed, but General Motors, surprising beat there, up 8%. And then Snapchat, down 14%, even though they had really good earnings. I wish I would have held my shorts. I had some good short positions on Snapchat. That was way back here when Don Fron was on the show back in October of 2020, and I got stopped out, and then I ended up shorting back up here. Made a lot of money on Snapchat, but I really wish I would have held it as it dropped all the way down to sub $10. But down 14% on the day, but the last couple weeks have just been really, really strong for Snapchat. But anyway, I would leave it. Let's go to your earnings calendar for mañana. At least talk about what's... Did I not put it in there? Darn it. We'll go to... Here we go. All right, so sorry. On the fly adjustments. As we know, January done. And I will get to that in just a second, Liz, about the as goes January, so goes the rest of the year. There's a lot of great statistics out there on that one, which show pretty high probability of the market being up now for the at the end of the year. But here's your earnings calendar for tomorrow, economic calendar for tomorrow. A lot of manufacturing and services numbers, mainly international. You can see you've got manufacturing PMI for Europe, for the UK. You also have it for Canada and the US. Most of the fireworks for the US happening after markets open. So here you have 6:45 in the morning Pacific time. You have manufacturing PMI, then you have manufacturing PMI again 15 minutes later, JOLTS job openings, construction spending, ISM manufacturing prices, Ward total vehicle sales, crude oil inventories, and then the big daddy, which will happen at 11 a.m. Pacific time, FOMC. Right now that is expected to jump 25 basis points from 4.5 to 4.75. That is pretty much priced in. It's at 11:30 when we get that press conference, and that really will be, in my mind, the one that creates the waves. It will be your not popcorn trade. It's really like a popcorn market of the day. It's going to look like that right after that announcement. Just a big volatile swing back and forth. Hopefully you don't get caught up in all that stuff, so I always recommend staying away, even though we know exactly what they're going to do. They're going to raise 25 basis points. It's what do they say about tapering? What do they say about maybe pivoting because of the inflation data? We just don't know at this point, and that can create a lot of speculation. Now, the last part will be the earnings for tomorrow. Hallelujah, hallelujah. The big daddy up at the top, Meta. Facebook, will always be Facebook to me. You have Meta reporting after market close, and then there's a few others in here. You've got Altria reporting before market open, T-Mobile, Novartis, Thermo Fisher. Those are your big names that are reporting. I think MetLife is also reporting tomorrow. But let's take a quick look here at Meta. So Meta has been on an absolute tear lately. I'm kind of hoping that they miss and just have a huge sell-off so I can get some massive premium on some puts tomorrow. But I'm not going to be overly aggressive because you see what happened last time they reported earnings. You can see here they missed, right? Their earnings were supposed to be $1.89, call it $1.90 per share. They actually came out at $1.64. So they missed by about 26 cents. And that day they were down significantly. I'll read to you the numbers. We got podcasters that can't see all that stuff. But if you look at their gap down, they gapped down 24%. But over the next few days, it continued to sell off, right? So just because it has a huge sell-off and doesn't mean it's the bottom. It could continue to have some negativity and spread for the next couple of days. Okay, so that's your economic calendar. That's your earnings calendar. As far as goes January, so goes the rest of the year. You know, when you have that mantra, which I believe the number is 85% of the time the market puts in a higher result at the end of the year, that's a pretty impressive number. I mean, anytime I have 85% odds of something working, I'm inclined to go with those odds. I think this year's going to be different. Again, I don't know what the future is going to hold, but my forecast has been actually relatively positive Q1. Q2, I think we start to see things slow down, and then I think we get some negativity back in Q3 and Q4. So I think it'll be a choppy market, closing relatively unchanged for the year. But of course, it says as goes January, so goes the rest of the year. So even if the markets close 0.01% higher than they opened, that mantra will reign true. So I don't think you'll get a big swing. I think it's going to be very close. But again, market's always right. Number one on my list of what I would tell myself, tell my younger self. Okay, tomorrow, I'm going to have Jerry Baldwin in the program. We're going to talk futures tomorrow. We'll see what he sees in the market. What is his tactics for trading futures? He's more of an intraday guy. Let him explain his indicator again, because I find his indicator very interesting, the way it chops it up into 60, 15, 5, and the different time frames on things like RSI and stochastics as well. So we'll have to wait and see what his commentary is on the markets for tomorrow. If you have any questions, feel free to send them on in. And down below the YouTube video is the best place to go. Just pick any video on the Trader Merlin channel, type in your question, and I will incorporate that into the slides just like I did Ivan's today. I do have a few questions that I did not get to today that were sent in. I think Philip had one, Scott had one, and Jason as well. So I will have to get to those on tomorrow's show. And then we'll also do our challenge for February. I did not do really good on my challenge for January. I plead the 5th on that one, but I have to do good on the February one. So I will ask you guys tomorrow, or you can email me at TraderMerlin@gmail.com what your challenge for the month of February will be, and I will bring that one up more, and hopefully we'll stick to it. Yeah, and thank you guys very much for the questions, and hope that you enjoyed it. Hope you learned something along the way, and maybe you go away from this program tonight and start thinking about your trading and how some of those pieces might impact you, and put those into actions right away. Because the sooner you do it, the sooner you get started, the more time you have to implement all these things and achieve your financial goals. So that said, hope you guys have a fantastic remainder of your year. How many years of low interest during that time? Oh, I don't know. I don't know. That one caught me from the left field at the last second, Richard. But I'm just wrapping up. I'll make a note of that one and see if I can address that in a further show with some graphics to support it as well. So thank you guys so much. Hope you learned something today. If you did, hit that like button. Share it with somebody who might be starting out as a trader as well. It could definitely help them. And that said, I will see you tomorrow with Jerry Baldwin. Take care.